Happy New Year, everybody. It's the first Monday of 2017, and you have tuned into Business Daily. I'm Ijiyun in Seoul. Before we get started, let's first get a quick check of today's highlights. Korea's petrochemicals exports are expected to have reached an all-time high last year, largely due to increased demand from China and other emerging markets. There are growing calls for policies to fire up consumer sentiment as the Christmas holiday and New Year celebrations weren't enough to open up consumers' wallets. These stories and more coming right up. But first, the combined government core debt of G20 nations topped $58 trillion as of the end of June last year. The Bank for International Settlements says the figure surged more than 9% in the space of just 6 months. Now, that's a lot quicker than the 16% growth recorded over the past 5 years. The pace of growth in Korea was one of the fastest, trailing Saudi Arabia and China. In terms of the ratio for combined government debt to GDP, Japan was the highest, with over 230%, followed by Italy and France. Despite an overall slump in Korea's total exports in recent years, outbound shipments of oil-related products are on the rise. In fact, exports of gasoline, diesel, and the like are estimated to have reached an all-time high last year. Our Kim Min-ji has this report.
Korea's oil refinery industry is expected to see exports of oil-related products hit a record high for last year, despite an overall downward trend for the country's exports. According to industry data, Korea's 4 oil refiners, SK Innovation, GS Caltex, S-Oil, and Hyundai Oil Bank, exported 445 million barrels of oil-related products as of November. Adding on December figures, it's expected to reach 490 million barrels, surpassing the previous record of 477 million barrels exported in 2015. The shipments include gasoline, diesel, naphtha, and other oil-related products. This is thanks in part to Korea's diverse range of export partners, and especially due to growing demand from China and other countries in Southeast Asia, as well as OPEC's recent decision to curb oil production, which has lifted global oil prices slightly. And building on the increased exports, the combined operating profits of the 4 oil refiners are projected to hit a record high of over $5.9 billion for 2016. In the first 3 quarters of last year, the 4 companies posted a total operating profit of $4.7 billion, already surpassing the combined 2015 figure. And it's likely they will easily scoop $1.2 billion in profits in the 4th quarter. Their previous record operating profit was $5.6 billion in 2011. Prospects are also bright for this year, with demand in Asia expected to grow and global oil prices forecast to maintain their recovery momentum. On top of that, the incoming Trump administration's plan to revitalize the U.S. economy could send demand shooting up. But industry officials point out that increased protectionism could put the brakes on exports. Kim Min-ji, Business Daily.
And on the topic of exports, Korea is aiming for a comeback. During a tour of the port of Pyeongtaek, Minister of Trade, Industry and Energy Chu Hyung-won said his first New Year's goal is improving exports. He said he's looking to return Korea's exports to $500 billion this year. Now, to realize this, Minister Ju said in the coming 5 years, his office will support 35,000 SMEs to help them focus more on the global market as opposed to demand at home. He wants to see a 5% growth in trade by small and medium-sized businesses this year, as Korea's exports have logged a negative growth over the past 2 years. Last year, it's estimated to have dropped by nearly 6%, coming in at $495 billion. The Korean equity market didn't move much on the first session of 2017, with most investors still stuck in wait-and-see mode. We're now joined by our markets contributor Choi Jin-suk to talk about overall stock market performance and upcoming market events. Hello, Jin-suk.
Great to be here.
All right, so how did the Korean stock market close on the first day of the year?
As a matter of fact, volatility was mostly limited on the first session of 2017. The Kospi market closed modestly flat at 2026.16, while the Kosdaq fluctuated throughout the session to close at 632.94 up by 0.1% compared to the previous session. The Kospi market fell to as low as 2015 in early hours, but it soon erased most early losses during the session. Both foreign investors and institutional investors seem to be reluctant to make radical moves so early in the new year. Although movements of the entire Kosdaq index were mostly muted, a number of stocks related to certain political heavyweights were spotlighted on the market today.
So what market events are lined up for this week? I mean, we have a variety of market factors that are likely to weigh in for the week of the new year.
Right. We have a lot of market events regarding all major market factors, including global monetary policy, economic data, and corporate earnings. First of all, global economic data will be the focus in the near term. ISM manufacturing data from the U.S. released on Tuesday local time. Thursday's ADP employment numbers, which can be a leading indicator for Labor Department employment data to follow on Friday, and of course the jobs report itself are expected to draw a lot of attention from global investors. U.S. auto sales numbers will be unveiled on Wednesday as well. The overall picture doesn't seem too bad. U.S. manufacturing is expected to continue solid expansion, while the labor market is forecast to have added 175,000 jobs last month.
And we had the second interest rate hike over in the U.S. And U.S. monetary policy events will also attract some attention, right?
Exactly. Most of all, FOMC minutes released on Wednesday local time will be closely monitored. The Fed decided to raise its benchmark interest rate at the December FOMC after the first rate hike a year earlier. Along with the decision, the Fed signaled 3 rate hikes this year, which were well above market expectations. Therefore, it will be interesting and very significant to see what conversations took place during the December meeting. If Fed officials were shown to agree on faster rate hikes in 2017, global financial markets can take a hit due to fears of less liquidity. Along with the minutes, several Fed officials, including Chicago Fed President Charles Evans, Richmond Fed President Jeffrey Lecker, and Dallas Fed President Robert Kaplan, will deliver a speech this week.
And coming back here at home, corporate earnings season is just around the corner. So what are the expectations on that so far?
Samsung Electronics will unveil its Q4 2016 earnings guidance on Friday, and the report is considered an official kickoff of the earnings season. Expectations have been raised significantly. Experts expect the company recorded above 8 trillion Korean won or $6.6 billion in operating profits last quarter. This will be a sharp rebound from Q3. What's more optimistic is that securities firms started lifting their predictions from 7.9 trillion Korean won in the mid-December period to above 8 trillion Korean won just recently. The semiconductor unit is expected to have recorded robust earnings growth. Reflecting such a sharp earnings rebound, the company's share prices skyrocketed by as much as 45% last year. But this also means that if the company's quarterly results fall far short of market expectations, there could be a sharp decline in share prices.
And of course, the foreign exchange market is still expected to be one of the major market factors. So what should investors keep in mind in this regard?
After the U.S. presidential election, the rising dollar followed by a weakening Chinese yuan has been raising concerns over capital outflows from major emerging markets, including China. That's why I mentioned earlier that we need a better economic picture from China to mitigate such concerns. Fortunately, economic indicators from China started off with a positive picture in the new year. Manufacturing trends in December expanded again, although the data failed to beat market expectations. Since the rising dollar and weakening yuan have spurred fears over capital outflows from China, better data from the country can provide a positive catalyst throughout global financial markets. But still, investors will need to interpret global economic indicators considering their implications for the FX market.
All right, thank you so much for that, and we'll be hearing you on Friday. Thank you so much.
Thank you.
Only a third of self-employed Koreans are seen to be maintaining their businesses due to oversaturation in the market. According to the National Tax Service, over 1 million people started their own business in 2015, on average 3,000 people on a daily basis. But at the same time, roughly 2,000 owners closed shop each day, bringing the total to 740,000 in the same year. Businesses were heavily concentrated in services, real estate, and rentals, as well as retail and the restaurant industry. The chance of survival was worst in eateries, with over a fifth closing down. Experts say the excessive competition comes as more people seek out sectors with low entry barriers. And it's getting no easier for restaurants as we enter into the new year. Consumer sentiment looks to remain flat, even as prices are lower to compel spending. And some are calling on the government to enact policies to address consumer anxiety. Our Eunice Kim tells us more.
Unlike past New Year holidays, this year, this 한정식 restaurant is quiet. It offers course meals at more affordable levels. Its 70,000 won per person option, just under $60, is off the menu entirely. But the efforts seem to make little difference.
Sales have shrunk over 30% since August. Calls usually triple at year-end, but it's only at 80% now.
At the department stores, New Year's gift sets have changed as well. Those featuring modestly priced pork and mackerel have appeared for the first time. All sets are priced below 50,000 won, including those with the pricier beef and dried yellow corvina. One place enjoying steady traffic is the 24-hour mart. 1,000 won coffee, as well as lunchbox sets, are great for people looking for cost-effective options.
Our coffee is sought out by customers in their 20s and 40s, while lunchbox sets are popular with office workers.
Experts are calling for new government policies that reflect the shift in consumer patterns in order to pull consumer sentiment from the lows of the global financial crisis.
Rather than policies linked to the low-income people and welfare, it should be for high-income groups and one-person households.
And instead of stopping at policies that induce spending, they say changes need to be structural and comprehensive in scope if they are to relieve overall consumer anxieties.
Providing high value-added jobs is a good way to increase spending from the young and those above 50. For seniors, we need to expand the pension and welfare system.
Experts add a prerequisite to normalizing consumer sentiment is the settlement of the political risk surrounding the Choi Soon-sil scandal and the president's impeachment trial. Eunice Kim, Business Daily.
And things are not looking much better for retailers either, as major department stores start the year off with steep discounts in an effort to bolster sagging sales. Our Lee Ju-young has more.
The year of the red rooster is said to bear the image of a bright streak of light breaking through the darkness, representing renewal and fresh opportunities. But the start of the new year is already looking rather gloomy for department stores around the country, which have defied custom and kicked off major sales events in an effort to boost consumption. Performance has been on a downward trend for some of the largest names in the industry. Data shows major retailer Lotte department store saw sales decline by 0.5% in November, along with Hyundai department store, which also logged a sales drop of 1.5%. December figures were not much better, an anomaly given that the last 2 months of the year typically take up the largest portion of annual sales. Lotte says it's offering discounts on some 950 brands, while another big player, 신세계, is shaving off a maximum 70% from some 500 brands. Retailers' increased efforts to boost numbers comes as Korea's consumer sentiment index has dipped to a near 8-year low in December, falling further from pessimism already prevailing in November. Consumption by foreign tourists, mainly from China, has taken a hit as well, with the number of foreigners who shopped at Korea's duty-free shops falling almost 18% in November on month. Lee Ju-young, Business Daily.
And that wraps it up for today, but we'll be back tomorrow with more business news that matters to you. So don't forget to tune in then. Thanks for watching, and goodbye.